Morning traders, it's the 9th of March. We're Signal Centre talking bull. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, pretty good, thanks, mate.
Good. Okay, as always, anybody watching, please feel free to post up in the comments if there's any markets that you're looking at today or would like some help on or some guidance on or a different opinion on potentially. We can do our best to help out where possible from a technical perspective on the charts today. As always, going to go through the latest headlines, going to go through the gun to the head challenge and also what we can expect from the day ahead in terms of the upcoming data. So first up, let's do the headlines. The ADP reports stronger US payrolls growth yesterday, which was pretty good ahead of the non-farm payrolls, which are due out tomorrow. The data recorded an increase in private sector payrolls of 242,000 for February, above the consensus forecast of 200,000, but there was only a small upward revision to the January increase to 119,000 from the flash reading of 106. The annual increase in wages slowed slightly to a 12-month low of 7.2% from 7.3% previously. There was also a marginal shift in Powell's emphasis. The prepared text of Powell's testimony was the same as on Tuesday, which is normal practice. However, the comment that no decision had been made on a potential 50 basis point rate hike for March's policy meeting was noted. He insisted that the March decision is data dependent and will be guided by incoming data. In this context, he notes that the jobs and CPI data will be very important. So market is still expecting a 50 basis point hike for March, despite Powell's comments. The market still put the chances of a 50 basis point rate hike for March at above 70%. So that's what we're looking for later on this month. The dollar held on to most of the gains that it made in the previous session. Bit of indecision on the chart yesterday, but held on to most of those gains amid expectations of a hawkish Fed and vulnerability in equities also tending to underpin the US currency. In terms of what's happening in the Bank of England, one of the policy members stated that many tightening effects are still to take hold and over-tightening poses a more material risk at this point. In this context, she stated that the prudent policy would be to hold policy steady. The stance was not surprising given that she had voted against rate increases at the last two MPC meetings. Bank of Canada yesterday, they left rates on hold as was widely expected. They remain at 4.5%. According to the bank, economic developments have been broadly in line with expectations, with inflation expected to decline to 3% by the middle of the year. But the bank did, however, state that it was ready to increase rates further if required. So in terms of other central bank policy, we've got the Bank of Japan tomorrow. They'll announce their latest policy decision. Consensus forecasts are for no change, but this is the last meeting for Bank Governor Kuroda, maintaining some concerns over a surprise decision. So we'll all be braced for that tomorrow and do a bit more of a preview on that tomorrow ahead of the event. I say ahead of the event, I think it's actually out at 3 o'clock this morning, so tomorrow morning. So that's all we're going to get. So it could be a surprise decision overnight. Do be aware if you have some yen exposure. Okay, Steve, let's take a look at some charts, shall we?
Yeah, sure. Let's take a look at Bitcoin first. Approaching a really decent level on the charts. We've got the daily chart here. Obviously, just a reminder, back from the rally we've had from just below the 16,000 mark all the way up, impulsive move higher, really nice 5 legs complete, and we've had the pullback in the A leg, and this is around about the support area. The support area is highlighted from previous swing highs where prices topped out, and even if we go back all the way back to here, you can see how important this level is. In fact, let's do that. Let's draw the line from there, and you can see how once we broke through this previous resistance level, how strong the move was and how it acted as support after that. So we're approaching that now. We've got the level at around about 21,500. I've mentioned it all week, 21,473 to be exact or precise on this chart. We've had this upward trending support line, which we broke down below and traded below yesterday. So that's really key as well. We said there's a chance of it breaking lower when it closed below there on Tuesday night, and Wednesday has followed through to the downside. In a ABC correction, we normally get an A wave down. It's hit that sort of target, that 38.2, 50% or 61.8% type of Fibonacci retracement. We'll get a B leg higher at some point and then the C leg. So maybe this support might act as support and might do a job first time round, but I'd be very wary if it does break through first or second, third time round. So they're the levels to watch in Bitcoin. Ethereum doing the same sort of job really. It's trading looking at a bit topish, double top potentially if we get a break of this neckline. Let's highlight the neckline here. Looking back, there's no real sort of like other sort of lines to pick up or a previous price action to pick up. So we'll just take it as 1463. Still a little bit of a way to go before we get there. But we have had some major indecision over the last 4-5 days. And yesterday we saw the break to the downside. A little bit of respite this morning, but definitely on the back foot. Not like XRP. XRP is putting a brave face on and trying desperately to break up through this downward trending resistance line. We managed to close right on it yesterday. We're closed also on the 55 and the 200-day moving average. So be aware of this. This could potentially explode higher if it manages to sort of like break away. If there's anything pending, I don't know if there's any news pending on the XRP, the Ripple lawsuit with the SEC. Yeah, at the moment, resistance is holding, but the bulls are making a brave old effort with it. The further resistance up at 43.37. At the moment, the downward trending resistance line is 38.70. We're just trading slightly above that. 200-day moving average coming in at 39.75. That's wrapped up cryptos, unless there's any other requests that come through. Let's take a look. Okay, let's take a look at gold. Gold's had a real turnaround that happened on Tuesday, and it definitely caught me out. I was looking to go long in silver, I think it was. And yeah, this is broken down lower. We've got close to the support at 1805. Yesterday was a little bit indecisive. Didn't really have much of a range, 1810 to 1825, and currently trading at 1815. So we've got the 100-day moving average coming in below at 1803, so that'll support the 1805 support that we've got. 200-day moving average down at 1775. That's in front of the 50% fib. And remember that flag target we had at 1790. I think 1788, 1790. We still do some sort of support job. But yeah, under pressure overall. I was taking a look at the actual new sentiment analysis in silver, and you can see it posted a 70% confidence of moving lower. Today it's posted this over the next 8 days. I mean, you can see on this chart here, it's already done a bit of a job, and you can see that the new sentiment has turned bearish. So that's one to watch. The chart for me says that potentially we could stall around here, but yeah, if we do get that breakthrough, that'll be backing the new sentiment. Sorry, this is silver. I was talking about silver. Gold and silver I sort of wrap up as one now and then. This is a silver. It's broken through the support at 2043, and we're trading at the lowest levels really we've seen since November, early November, 4th of November here, when we broke up and took out, eventually took out the resistance at 21.24. So yeah, again, ABC correction. We're in the A leg and looking for maybe a little bit of a reaction higher to the B leg, but there's not as much support really, or the support isn't as close here. Really, we're looking at potentially down towards the 1960 level, then maybe 1885 doing a job, and then around about $18. So not looking so rosy on the silver side of things. No silver lining behind this cloud. Copper trading around $4. Had a decent day yesterday, reacted higher from support, but now giving up those gains. We've got the $4 mark has been quite a key level. Remember, we had that 396 level from back mid-November, and that proved a tough nut to crack. We eventually got through there, and it's acted as support already end of Feb and has done the same job over the last couple of days. So for me, it's key. We've got to get below that 396, and if we do break below that 396, there'll be a little bit of an accelerated move to the downside. Oil now has the resistance did a fantastic job. Bearish outside candle on Tuesday, basically, and we got the follow through Wednesday from the oil inventories assisted with that. But yeah, 80.72 did the job. That previous swing high acted as resistance again, and although we closed above the 100-day moving average, it only lasted for 24 hours, and we were way back down below it, engulfing 3 days of upward price action in one fell swoop. Continued lower the next day. Next support really on a upward trending support line coming in around about the 74.25 area. Also got this pivotal $76 level. Brent crude, that's trading at $5.70 premium to WTI. Broke out the triangle formation to the upside, stalled at the similar sort of resistance, 86.70, just in front of that, and again engulfed 4 days of price action in one fell swoop. Continued lower the next day, and still lower again this morning. So we've got support coming in now around about the 81.36 level, resistance above. I've left that triangle in 84.20. Natural gas, let's have a quick look at there. That's yeah, it's still under pressure really. It had that attempt to break higher, failed, and gapped open on the Monday, and price action has been quite subdued this week. Support coming in at 257, obviously the major resistance at 305. Let's take a look at the dollar now, Joe, see what that's doing to batter these indices, or batter these commodities around.
Yeah, okay, so dollar index, let's start there. So as mentioned in the commentary, very much an indecisive day yesterday. We can see that although prices gapped higher on the session following this really big move higher on Powell's comments on Tuesday, we did gap higher. We have filled that gap, but yesterday we pretty much closed where we opened to form a doji candle. And today we're down by 0.1% as things stand, obviously very early in the session, but still really eyeing up this 38.2% fib level at 106.15, expecting maybe some sort of resistance to form in and around that level in the short term. Yeah, still very much on the front foot following Powell's comments, and a bit of uncertainty about where markets are heading next. And we're seeing that filter through into the indices, which Steve will come on to pretty soon. So yeah, looking undecided, but well, strong, I think is the underlying direction. So if we look at Euro US dollar, we can see that that also posted a doji candle yesterday, but it is finding support here at 105.31. So while that continues to be the case, it does maybe raise the possibility of a short-term bounce. But if it breaks below this level, then it is likely to head towards the 38.2% fib level down at 104.61. And that's been the target really for some time on the downside. If that fails to hold, then brings into focus this next level of support, which is between 102.84 to 103.52. So a big old band of support potentially in there as well. So it's holding for now, but any further strength in the dollar index, and this is likely to break, and we're going to see lower prices. We noted that sterling versus the US dollar had completed a double top on Powell's comments on Tuesday. This big negative red candle. Yesterday we saw a little bit of a rebound, but it still failed to overcome this newly formed resistance level at 118.41. We're slightly above it at the moment. I've got a band on here. Blue probably not the best color, because I think my view is bearish really. If we do see a rally into this kind of zone, then I think that would be an ideal opportunity to potentially short it, given that we've completed this double top and we can expect to see lower prices. The measured move of the double top is down here at 112.36. So potentially some significant downside building here in sterling versus US dollar. But of course, we're going to need to see dollar strength in order for this to persist on the downside. Okay, so there's been a couple of requests. I'm going to take a look at dollar CAD. That's a request from Mark. So we can see here that prices had been, I'm just going to get rid of that now, been pretty choppy for a while, but we saw a big breakthrough resistance here at around 137.00, and now prices are rallying towards another area of resistance I've got drawn on the chart here at 138.37 to 138.55. So in this kind of area here, we might see a bit of stalling following this big move to the upside. Of course, if it can then start to break out through these levels, then there's a big resistance. This is why this is a resistance level. From back here, we can see that it capped gains back in October, and potentially may do so again. If we can get a break through that, though, you'd expect it to go on and reach these highs that we posted in October around 139.77. But looking at today's price action, we can see that there is a bit of indecision following these 2 days of strength. So it may be that we get a pullback to test these newly formed support levels before maybe a continuation to the upside. That may be what plays out from here. But all in all, anything linked to the US dollar looking pretty strong at the minute. Obviously favouring dollar. Okay, other requests. We've got Swiss
yen
franc,
and
Japanese
Aussie,
yen.
New Zealand dollar, yeah.
So same sort of view I've got on Swiss franc, Japanese yen as I had earlier in the week, and that it is trading in a downtrend. We can see here there's a sequence of lower highs. We've also got a 61.8% fib level from these highs that we posted in September last year down to these lows in January. And that 61.8% fib level is coming in at 146.10. We can see a couple of attempts at trying to overcome it, but each time we've got there, prices have failed to move to the upside. So for me, I'm still looking for opportunities to sell this for the time being, providing, of course, that these resistance levels continue to hold. I think that would be the key level for me, 146.34. That's the high that we posted on Tuesday. If prices close above that, then I'm ready to invalidate my bearish view, and we can start thinking about moving higher on this one, potentially towards that 78.6% fib level at 148.46. Just take a look at the intradays to see what's happening here. A bit of a mess on my chart, so let's just clean that right up, get rid of all the annotations. So this is the high that we just talked about on the daily, 146.36. So above there, I'm out. I don't want to be in it anymore. I think that overall we're starting maybe to look a bit more bullish. But while that remains the case, we've got this other high here from back in February. We are stalling and failing to overcome. So what's going to trigger further move down today? Probably a break of this support here. That's at 145.30. We can see that there's been a few touch points here on the intraday charts. This is the hourly chart. If that starts to break down, then for me, it will start triggering lower prices, and that would be in line with my bias, which is being dictated by this daily chart. So yeah, looking still for lower prices, unless of course it breaks through 146.34. Okay, Aussie New Zealand dollar. This has been quite an interesting one from a technical perspective. Let's just take a look at the bigger picture here. So we're trading in a big bullish channel for a significant period of time, from November 2021 until it broke in October 2022, forming a head and shoulders top. Prices broke lower, hit the measured move target of that head and shoulders top pattern. Then we saw this big old correction higher, which has rallied into a 50% fib level, formed a wedge, broke down, and now prices look to be heading lower once again. So we are in corrective mode at the moment. We can see that there is some support potentially around this zone here, around 107.36. While we're in this corrective phase following the break of this wedge, I'd still be looking for lower prices, and I think I'd be looking to sell into around 108.50 in the short term. So look at the daily intraday, see if there's anything happening here. Yesterday I highlighted potentially a bearish flag, didn't really do an awful lot. So I think still I would be looking for lower prices here, given that the short-term trend, as we can see here, is pretty bearish. I'm sure we can probably capture that within a channel as well, because we've got 3 touch points there. So yeah, while it remains within that channel, I think we can expect to see lower prices. So that's my view on Aussie New Zealand dollar. Aussie Swiss. Now let's take a quick look at that. Go back to the dailies. And yeah, this has been really nice on the downside. So we can see here is a sequence of lower highs. We rallied into a 61.8% fib level in the short term. Prices failed at that level, and it triggered a pretty nasty sell-off indeed. So now we're approaching these previous swing lows that we posted in December. So in terms of value, I wouldn't probably want to be shorting this much more at the moment, given that we are pretty close to a major support level. So maybe all the value on the downside has probably been taken out of that for now, and maybe the opportunities are more on the long side, on the speculative side, if we get a challenge of this support level. So if this 61.61 level can hold, maybe if we see a bit of a nudge below it to flush out some stop losses, but then a close above it, then what we'll have is a swing failure, and that may trigger some further upside in the short term. So I think for now, any move to the upside is going to be a corrective one, because clearly the overall trend remains bearish. But I think there's more opportunity maybe on the long side with this in the very short term, rather than looking to sell it further in the short term down towards these support levels at 61.61. Let's have a look at the intraday, see if there's anything there shaping up. So maybe some sort of bottom forming here in the very, very short term. If we get a break above these highs here at 62.68, then that may trigger a bit of a correction in the short term, maybe towards these previous lows that we can see on the left-hand side into this sort of region here, potentially. Highly speculative because the overall trend remains bearish, but just something that I'd be maybe looking at if I was trading this personally. Hopefully that's useful, guys. I'm going to leave it there, and Steve can take a look at some indices.
Lovely, cheers, Joe. Starting off with, let's start off with FTSE actually, because again, on the looking at these, oh, let's take a look at Eurostoxx actually. I'm looking at the new sentiment, try and get a little bit of a confirmation maybe on the sort of technicals. And I looked at in particular, let's look at UK 100. Yesterday we got a market alert in this one day ago, 60% confidence of the price moving lower within the next 9 days. We have got the price moving slightly higher yesterday, so the potential is it's got 9 days to move lower. We can see the new sentiment, this blue line here, moving aggressively lower. Over the last 24 hours, it's been slightly positive, but the EMA has moved lower. So take a look at that, and then let's take a look at the FTSE and see what it's doing on the price action side of things. Overnight, we've had a pretty decent sell-off. We had a good day yesterday. We had a rally, but overnight you can see we've completely engulfed that, and we've taken out the lows back to last Thursday's lows. So that looks pretty negative. Fifth and final wave complete on the daily chart, looking for this A leg. The A leg target is around about 78.38. Looking on the shorter term chart, again, in an ABC correction here, breaking below the cloud and breaking out that support. So yeah, on the back foot at the moment. We're having a little bit of a pullback currently, but yeah, looks like it could be a nice like topping formation, but really have to sort of like clear out these lows to confirm it. On the DAX, let's go back to the daily chart. Gives us a bit more information of the bigger picture. Again, a potential fifth and final wave, only potential so far. Really looking for this to break lower and get down to at least 14.925. That'll confirm the ABC, the A leg anyway. But yeah, yesterday's decent rally has sort of like seems to have stalled and reversed. Obviously, we had Tuesday's Powell's comments really putting a dent in the indice market, and reaction high yesterday thinking let's shake it off, boys, but on the back foot this morning. So really eyes on the 15,500 level for Germany 40 or DAX, a break below there, and we really do eat into last Friday's really strong rally, which shook off the bearish woes that we were building on. 15,270 support below. Last Thursday's low would obviously act as support as well, 15,145. EU 50, same sort of thing. I've been trying to sort of like fade this at this. It feels like we're putting a top in place, but we just, you know, the buyers keep sort of like coming up with get out of jail free cards. 4171.5 is where support is. We've hit there 3 times, and we're just sort of like putting an evening doji star formation in at the top. Wednesday's rally was pretty decent, but we've given up those gains as we enter the morning session in Europe. Dow US 30 evening star formation as well here. More negative day yesterday, so the US remained still under pressure after Powell's comments. Support coming in at 32,441. That's the level to target. Also, the 200-day moving average is down there, so that'll be a big level to take out if we do manage to get down there. Resistance above at 33,425, and that spike high that we got on Monday, which is 33,531. Nasdaq evening doji star formation. The high of that was 12,454, and 200-day moving average comes in today 11,895. We've given up yesterday's gains. We're back to where we opened yesterday. Well, we're not far away from it, trading at 12,156 at the moment. Little bits of support below, and we've got the moving averages are looking to do a job below this, as I say, from 11,900 all the way down to 11,677. We've got the 55, the 100, and the 200-day moving average. S&Ps, again, evening doji star formation, so a bearish formation. Yesterday's tried to sort of like fight back, but we've given up those gains already, yesterday's gains already, and we're on the back foot again. So 200-day moving average at 3938. That's the level to watch on the downside. On the upside, we need to clear the 4,075 level. But it feels a little bit bearish on the back foot on the indices. So that's where my gun to head trade's going. Again, bad run at the moment since last Friday. Last Friday, we're getting all cocky, Joe.
Yeah, we were a little bit. It was obviously a good day, both hitting target, but yeah, not been a great week, if we're totally honest. So just to round up what the gun to the head trades are, this is where Steve and I basically pick trade ideas live on the stream with stops and targets, with risk reward ratios better than 2 to 1. In the hope that we can turn a profit between now and 9 p.m. when we close these trades out, unless, of course, they hit the stops or the targets prior to that, and that seems to have been the case of late. Although yesterday I had a trade on Euro New Zealand dollar, which was actually offside by about a quarter of an R, so 0.25 R offside yesterday, which wasn't stopped out, just didn't do anything for the whole session. So we're trading these live. We've got an account which we started off with £2,000 with, and certainly not £2,000 anymore, Steve. It's down at closer to 1,800. We're risking 1% of our capital per trade each, so 2% per day, basically, in the hope that we can make 4, 5, 6% in return. So we need a few more of those days, Steve, where that happens. Maybe today will be the day.
Could be, maybe. Let's see.
You got one ready for us?
Yeah, I'm going to go for EU50. I'm selling this. Fifth and final leg. I know I've tried this already on the, I'm a bit annoyed really. On the 6th of March, I tried this, and that's the high. That's the high of the market. Since then, we have gone lower, but obviously I was stopped out or something silly. But anyway, let's take a look at, no, actually I was getting long there on, take those word backs on Monday, getting long and deserve to be stopped out because it is going lower. So yeah, in the A leg of the on the daily chart, we can see it on the 4-hour chart, looking to sort of like target around about the cloud here, 42.40, 42.30. And for me, I'm going to go for one today. I'm going to sort of like keep the stop quite tight, just above the swing high that we got on Wednesday, and targeting a move lower, something around here, Joe, for me. So let's open it up, get the trade on, and stop messing about. Let's try and get the trade on as close as we can to that 1% risk. Does that not let me do it? I don't understand why it's not letting me do it, Joe. Right, let's try again. That's basically saying I give up, mate. Um, 43.03. That's too much risk. 0.5. Yeah. 6, 7. Okay, let's go for 6. Take profit on this. Down at the 41.80. Something I'm looking at something like that. It's around about 3 to 1 risk reward. risking £16, £17 at 9p.
Cool. Good luck.
So I'll line that up and I'll get that published.
Lovely. Okay, I'm going to take a look at Euro New Zealand dollar. So this is what I traded yesterday, and it didn't break, so therefore I'm not going to try and fix it. So this is the daily chart. So I was noting that this was trading within a wedge formation. We can see here that there's a 78.6% fib level at 172.92, which is continuing to cap the upside. And for me, that is kind of the point where I'm either going to be wrong or right, because if it breaks above that 78.6% fib level, the chances are it's going to go on and try and attack those previous highs. So looking at the intraday, we can see that a bit of a range has formed here. We can see this failure at this previous swing level back on the 28th of February. This was my trade yesterday, so it got off to a reasonable start, then went against me before then coming back to be slightly offside at 9 p.m. So I'm just going to simply move that along, maybe adjust the stop a tad because I can go just above that high. So I want to sell this again, Steve. 172.37 is the price I've got on my screen at the minute. So if you can get me somewhere close to that, I'll be happy. With a stop loss at 173.09.
Yep.
And a target at the lower end of this range at 170.14.
Go for it. Around about 3 to 1.
Yes.
170.14, 173.09. You're in at 172.38.
Okay. And according to Steve's chart there, we should be in a C leg correction wave as well. So that works out quite nicely. I'll be very happy with that.
Right. Definitely crossing our fingers for this one, Joe.
Yes.
We can't just be a team that turns up during the week, says rubbish for Monday to Thursday, and then hits the bullseye on Friday. We can't be known as that.
No, that wouldn't be a good look. But I mean,
Or maybe just people who
would it be
tune in on
profitable?
Friday.
Depends. As long as
Yeah.
we're up until that point, we're risking 8%. So we need to have we need to have a 8% worth of wins on these Fridays to make that even break even.
Well, that's if we get stopped out fully during the week.
Yeah. Yeah.
So yeah.
Anyway, we do go through phases where markets just seem to be, adhering to the sort of technical rules that that we apply to our trading, and we just go on mad runs. But at the minute, it's just been a bit choppy and not really giving us the opportunities. But hopefully that will change at some point. We just got to stay in there and not blow ourselves up, which by risking 1% per trade, it's unlikely that we will do. So we'll stick in there and see how it goes. Okay, day ahead. What have we got coming up today? So jobless claims, as always, on a Thursday. That's at 1:30 UK time. Then overnight, 3 a.m. UK time, we've got the Bank of Japan policy decision. And as mentioned, this is the last policy decision from the outgoing bank governor Kuroda. So I don't know if he's going to leave some sort of parting shot or mic drop moment where he's going to come in and do something. There are no changes expected from the policy decision, but there may be some surprise decision as it is his last one. So key events over the rest of the week, we've got non-farm payrolls tomorrow. So that's going to be, a big focus tomorrow. So we'll do a bit of a preview ahead of that. We've also got Canadian employment as well, which will be, important, but obviously to a lesser extent than the non-farm payrolls. Okay, so Steve, let's leave it there. You all have a great day. Thank you very much for watching and for getting involved. And we'll be back tomorrow morning.
All right. Thanks. Cheers.
Bye-bye.